Good day, amazing forex traders. Today we're going to be analyzing USD chef. On USD chef, we could see what has been going on for some time now, and looking from the thing, we could see that market is currently bearish. But let's let's go to the monthly time frame and do our top-down analysis. Let's walk down from the higher time frame down to the lower time frame to get a clearer view of what will happen or what we are going to be expecting. Now, going to the monthly time frame, first thing first, the 1 month time frame. From the monthly time frame, well, here, as you all know, the monthly time frame is the time frame where I do come and sit to check the directional bias of the market. Now, let's clarify this. Let's break it down. We will see the market was ranging here. Now, went up here, high. This was a low, high. It broke out, lower low, lower high, then an internal range. You understand? I'll just classify it as just one. Lower low, lower high, lower low, then lower low, lower high, lower low. Now, since we found out that in the monthly time frame, this is currently bearish. The directional bias is bearish. This market is the downtrend. The market is a downtrend. Now the market is showing us, pointing that it is currently down. It is currently bearish. Now what are we going to be expecting on our head is catching the sells of this bad boy. Now how are we going to be catching the sells of this bad boy? Let's try checking some little factor, some confluence that can back up this. Since we have the bias, the directional bias of what we are going to be expecting, anything we are going to be doing should always be at our back, that we are going to be buying this. We are going to be buying this. So now you could see that market has been on a nasty range like here. If you check very well, you will realize that to each breakout there's always a range. To each breakout there's always a range. So you could see at this point here that market broke out, creating this double top, broke out from there. Then I know that there was a pullback there on a lower time frame, but what I'm trying to explain here, you could see some little range here, then a monthly candle, 1 month candle broke out from this resistance, from this support zone. The support zone that now turned to resistance, broke out from it, turning it into resistance. Now if you check very well, you see that market tested this at this point here, leaving a weak rejection, showing that this point here, anytime market comes here, there must be a reaction. Now what do you see? Market came to this point, creating a reaction on that point. You see market came here, reacted before it had the ability to break this point. Now for it to have that ability, the power to break this point, telling you that market may be eyeing this next zone, this 0.72019. That's where market will be liking. So how are we going to be entering this trade? How are we going to be going on how to take advantage of this? Now we're going to be going to the weekly time frame to check for any type of chart pattern or any other obstacle that may stop this thing from moving to the downside. Now on the weekly time frame, we could see a clear double top on this point here, and market cleared the double top with a candle, with a weekly candle, with a 1 week candle, and what did we see? We saw a potential pullback to the resistance zone, and that was what caused the push to the next key level, that was here. Now since we saw that, now we are going to be looking for another another reaction. Now you could see that market created this small consolidation, showing one push. Market came here, pushed back down, came here. So market have been trying to break this resistance zone for some days now, for some months now. You see, from 30th of June 2025 till date. No, not till date, till, let me see, till 12th of January 2026. You understand? Before market had the ability and the capability to break out this with a weekly time frame candle, with a monthly time frame candle, and it broke out. It broke out clearly. So let me see if I can get a clearer adjustment of that key level there. Okay, all right. Now, so that is how it is. Now you could see that market has broken out from this key level. The resistance level that's now, the support level that's now turned to resistance, has broken out from it with a monthly time frame candle, and now this is another bearish candle of the weekly time frame. So how many time frame candles do we have that back up the market is currently bearish at this moment? We have 1 month candle broke out. This way it reached. This way the candle reached and closed. I want to show you the closure of the weekly time frame candle. Here, monthly time frame candle was, where is that? Come on, I want to break this down so that you guys can get it clearer. And below, do you see where the monthly time frame candle closed? At this point here, that's where it closed. Now, going to the weekly time frame candle, let me show you. This way it closed at, it also closed here. Now leaving a gap. Now if you check this very well, you could see that, and on the weekly time frame we have a little bit of concern that's contradicting to the market direction. Markets created a weak rejection of, this is like a morning star, or is it, what type of candlestick formation, what type of candlestick is this? But it's just like, it's a pin bar that is this, a very nice, what they call it, whereby the buyers and sellers were fighting, and the buyers took advantage and pushed the market up to this point. You understand? Now, but though this is the little bit of concern about it, but let's see what the market is going to do. Number one, we have in our back of our palm, or in our mind, that the market is bearish. That the market is what? Bearish. And we found the market has taken out this double top. Market has broken out from this key level. This key level here, with both the weekly time frame and the monthly time frame candle both confirm that market has broken out well. Now, since we see that, we'll be going to the daily time frame candle to make more meaning out of it. Now, on the weekly time frame, we could see that markets, look at the gap, see the gap of what happened here. So that's why you see market came to this gap here and it's reacting on this point here. So we could see now that market is currently pulling back to the resistance level. So it will be a break and retest pattern. Now, this is where Fibonacci is going to come in play. Let's see what's going to happen at this point here. Now, at this point here, we're going to be dragging our Fibonacci from here to here. Let's see what's going to happen. Now, from this point here, we could see that this is a little area that this key level intersects together with the Fibonacci level, showing us that markets may likely pull back to this point here before reversing. So we'll be expecting a further pullback. So this pull up to this point, to the 50 pip or 60 pip retracement level, before the market will drop down. So this is our analysis. This is the analysis that this is what I can see what the market may likely do. Now let's calculate how many pips that the market may likely fall to. From here to here may be how many pips drop. Though it may not be necessary that the market may reach there, but that is the next key level. So this is a 645 pips. 645 pips that the market is going to drop to. Now, since we saw that, we're going to be going to the 4-hour time frame. The 4-hour time frame is where we usually wait and see what the market may likely do. Now, I could also see this point of this green candle at the middle of these two black candle. Now, seeing that, it's trying to tell me that market may likely pull back to that same side, but let me use Fibonacci because I don't use that. I will try using Fibonacci to check what I'm seeing very well. So I'll likely want the Fibonacci, the market to pull back to this point, to the middle here. But anyhow, the market want to do is still, we are a reactive trader and we only trade according to what the market is giving us, according to what we are seeing. We don't force, we don't predict, we only analyze and let the market do its thing. Once the market clicks to what we have anticipated the market will do, then we execute without thinking any other negative or positive outcome. Only what we just do, we execute, think about a risk management, apply it and let it flow. Now, that's what I anticipate market to do. I anticipate market to come to this point here, pull back to this point before falling back down. I anticipate something like this, a pullback to this point, maybe some minor reactions, then a drop, then a drop. That's what I'm anticipating. So this is what I'm anticipating that the market may do. If the market does not reach this point, no wahala. So far the market touched this key level here, which intersect together with the Fibonacci, because I'm a Fibonacci trader, and I see a very nice confirmation. I'll be taking the trade from that side here to the side here. So let's go to the 4-hour time frame to check how we are going to be entering this trade. On the 4-hour time frame, we could see what I call a counter trend line. I deal with the counter trend line bounce. So I'll be waiting for this market to pull further to the upside. Maybe it may come back to this zone today, then market may close, then on next week market may open, create something like this, then pull back to this place, then come back here. Then I will likely take trade. So I'll be taking trade at the rate of break retest continuation pattern. Then I'll be dragging it to the next zone. So this is what I can see that is happening here, because if you check very well, the daily time frame that has its own brain of its own self, that does not respect the monthly time frame direction, also respects the direction of the monthly time frame. You could see that the daily time frame is also bearish, the monthly time frame is bearish, the weekly time frame is bearish. now we'll be expecting a high probable sell to the downside. So what we'll be waiting for now is an entry method. We'll be waiting for the entry model to form. We're going to be coming to the daily time frame and sitting on the daily time frame. Once the daily time frame should pull back further to this zone here, then we can be saying that we want to catch our sells. But we don't sell from here. We don't sell, we don't put our pending order here. We sell when we see confirmation. Then we drag it to this point here. So this is what I can see on USD Chef. So please and please, if you like my content, please make sure you do subscribe and always like. If you subscribe to my channel, whenever I send a video, especially as these potential videos, you'll be the first to get notified on what I could see and how to take advantage of it. So I'm going to be releasing another video next week on how this pair has formed and how to take advantage of it. But if I do not send it, maybe I don't have time because I'm a student, and at this moment I'm dealing with a lot of things. Able to trade is by God grace, because if I don't trade, where will I see money to focus on some little things? So if you like my content, please make sure you do subscribe and like, because if you do it, it will help the YouTube algorithm and to make my videos to reach other people so that they can get to see it and it will get to help them. So thank you very much for watching. Have a nice day.